Thanks for tuning in to Around the Coin podcast. Today's guest is James West, the CEO of Globe Derivative Exchange. Globe is a cryptocurrency exchange that's raised over $18 million that enables people to trade cryptocurrencies throughout the world. We talked about how they manage their treasury, how they started off with the project, how they raised money, why they raised money, what the company looks like today, how they avoided the downfalls of the Luna crash and why so many other cryptocurrency exchanges did not. We talked about the Wall Street bets, some of the stock trading, what you should actually take from that lesson, which is different than what I thought he would say. So there's some counterintuitive lessons there. James discusses the macroeconomy, why things are the way they are. We give some views on the centralized exchanges versus decentralized, centralized fiat currency versus decentralized, what the world reserve currency will look like. We packed a lot into this conversation. So I hope you enjoy. Here is James West. All right, James, I'm excited to chat with you. Thanks for staying up late again. I appreciate it. Let's start with chatting about the beginning. So when you started this project, Globe, you had a background in quantitative trading, as I understand it, Ph.D. So this was kind of in your blood. What did you seek to do differently with Globe versus what else is out there at the time of starting it?
Yeah, I mean, so in the earliest days, that I think most of the features value, I mean, there's really one feature value at that time. I see very clear faded away. And pretty much all the liquidity kind of came from one internal desk that had a lot of conflict of interest with the other players trying to get involved. And it was a real impediment actually to proper institutional adoption. And I think our initial thesis was that, instead of trying to compete with these players and being a primary liquidity provider, so then the kind of route the FTX, so, starting off as a blockchain maker and then kind of pivoting into being an exchange, we sort of like, okay, well, we're going to enable, the Tower researches and the Jane Streets, and, the jump tradings as well to come market based on a platform that was going to perform in the way that they needed and give them the kind of access that they needed. I think that was the first most tangible thing that we kind of recognized at the time. And then secondly was just the lack of innovation was going to happen on that platform. So I think, we looked at the time and we said, that there's like 100-year narrative of what we call like Markovitz's dream. So like if you read the earliest papers from modern portfolio theory, which ironically is neither modern, isn't particularly suitable theory, I guess there's about portfolios, and you look at what people are going to trade in, like, it's a progress throughout, every decade, at least in terms of major advance in terms of what the tradable universe was. But we saw that there was still like probably 20, 30 years left to go. And so someone had to go lead that final charge. So I think those were kind of the two main drivers in the early days.
Yeah. And let's also, if you could just describe what Globe does and how far along in this journey you guys are, either users, revenue, money raised, however you measure it.
Everyone likes whatever their best metric is. I think that's usually the way that.
Yeah, give me all of it.
I mean, so primarily futures exchange. I think in this era, every crypto exchange is going to be everything exchange sooner or later. Everyone's wanted to run equities for a long time. I think everyone loves the dream of offering, an S&P 500 curve, which is going to be tradable by anyone, anywhere in the world. I think in terms of metrics, we were, I think, the fastest growing by revenue. We are the most performant. I think we probably had one of the most in-demand token sales, although to be honest with you, we ran that at the top of the bull market for the mega market collapse. So now possibly, yeah, I mean, these things usually were a reflection of the market conditions and they are too much else. We now have I think we have maybe 130, 140,000 customers that we serve. 3 or 4 million signups for those are mostly bots, like any exchange. So there was and maybe I think 60, 70,000 of them now funded and like doing things on the platform to deriving value from it. What other metrics we care about? I think those are most of them. I think we're now number one in a few niches where, you know, a lot of the competition just kind of blew up earlier this year. So like most exchanges, we have an asset management business as well. We service Silicon Valley startups and help them to manage their treasuries or their idle cash. And, I think at the start of the year, there were like 5-10 competitors there. We've probably been going the longest. Most of them just blew up at the Luna prices. Like their IT risk management is punted all into Luna and then just prayer repegs. Yeah, I think those.
So can I ask you about that a little bit? So,
yeah.
So you mentioned a few. So there's a few different categories when you think of a futures exchange. First of all, can you define a futures exchange? And then I want to ask you like what the key parts of the business operation are: treasury management, trading, etc.
Yeah. So futures contracts, perhaps it's a misnomer. In many ways, it's really more of a swap contract, right? Which kind of derives, at least its recent origins from about the 1960s on very different instruments. But effectively, the point is is to allow people to go long or short with a reasonable amount of leverage, which in itself is just massively improved the liquidity of spot markets. The spot market makers hedge on parts and has become, the trading instrument of choice. There's effectively a basis payment in between. It's like there's effectively a payment between long and shorts in between first to peg the price of future against the swap price. But on that base, the disparity between the prices does reflect some level of market.
And is the general playbook that has worked for companies in this space providing futures exchanges, is it that they're initially providing liquidity? So is it that you'll go raise money from wealthy individuals, LPs, investment funds, and then you'll accept the trades of the market, or what is the value of that money between buyers and sellers?
I would say that the history dates back until at least, I think, 2012, 2013, the first crypto futures exchanges. They go back a very long way and people don't really remember any of them anymore. The first really big successful one was BitMEX, which was the primary market maker on Earn Value. They ended up having to be very transparent about that. I don't believe they wanted to be. I think they found that it was profitable, but the problem with that is that it creates a huge conflict of interest. So they have people in the team that had this very material, non-public information, using that kind of phrase. And I think a big part as well is just that I know it's the Hedge. And very, very few remotely sophisticated market makers at the time. And so this model was copied for quite a while.
And what's actually happening there? So if I come to the site and I want to make a bet that the price of Bitcoin is going to go down in the future, what is that proprietary information that the company or the exchange would have? And what are the mechanics of the trade if it's being done with the exchange liquidity?
Or none. That's the matter. So if you go to a bank and you tell them you want to, short the euro, whatever exchange rate or something, they'll often tag you as like a retail trader, right? And they'll say, actually, these retail traders are not even worth, the process to the bank for whatever the manufacturers pool market makers hedging. And if you're a large institutional trader, then, Renaissance Tech or whatever, they'll see your trade and they'll hedge. Or they'll even get out of the way, or maybe even last look at, avoid the trade and ask you to resubmit or just let it slip along. That's actually pretty involved in their finance. But, here it gets hit by a market maker that's offering a real quote. That market maker, maybe they're happy taking that inventory. Maybe they go risk to them, but maybe they go hedge somewhere else. And so at the mod trades, if they think it's a directional trade, they'll see like a lot of cross venues where effectively lots of leads to going and replicating that trade elsewhere to add the risk that they're taking.
And in the first case of the typical financial institutions, you said if they're letting the retail investor trade before they're ignoring it, why would they be doing that?
Sorry?
Why would they be doing it? There's no point. It's too small.
It's not that it's too small, as they think that the flow is so uninformed that they don't think it's worth hedging at risk. Like they basically say it's just, randomly flipping your coins. They're quite happy just to accept that risk.
Okay, got it. And in the case of
this is not very well known at all. Yeah. So if you go to Robinhood, right, or root of faith there, you provide additional data to some of the world's largest market makers about what retail traders are doing. And maybe they'll hedge that with a couple of much.
So would it be true to say that Robinhood has a treasury, an account with money in it? And when you say they want to hedge the bets of the retail investors, that means they want to make trades that are counterbalancing whatever the retail investors
can take the side of that, without making well, the first is you make them take the other side, or you just replicate some amount of the trades. And often it's just not felt like it's worth it to replicate it all. And that's quite common in the forex assets and banks. That's going to be quite common on Robinhood as well. Like a lot of these transactions you'll see will be times when the market makers are hedging. In fact, the whole Robinhood meme stock thing is absurdly misunderstood in terms of who actually won there. It was hedge funds. It wasn't retail, sadly, or the ordinary industry to make it out.
Say more about that. So I think the general narrative from the people on Twitter and the mainstream is like the hedge funds lost. They got pushed into liquidating the stocks, so much so they had to sell. There's kind of that squeeze. Like it looks at like Reddit and meme stocks won. What actually happened?
Well, this was true for like the first week, maybe 2 years of the stretch. And then that completely flipped around. Then, there was some hedge funds that were made short. But the rest of the hedge fund crowd in general went long at the right kind of time and actually made a lot out of the retail. And then actually the retail got wrecked pretty hard overall. So I think that the public narrative there is the opposite of the reality was true for like a very brief period of time.
So would it be true to say that there were hedge funds who made bets saying that the price, the stock value of GameStop, for instance, or AMC is going to decrease in the future? It's going to be lower tomorrow than it is today. A bunch of people on Reddit got together and bought those stocks. They went up. And then the hedge funds, in recognizing that, they flipped their bets, took their losses on the shorts and said, we're going to bet that tomorrow it's going to be worth more. Is that
be more accurate? Guys buying it up, and then the retail guys bought it up, and then bought the Pico top, and then the hedge funds kind of sold into that. So actually, the interesting one. But by the time you're actually,
but there must have been some hedge funds that lost there.
Oh yeah, there were like two wrecked pretty hard. I think.
Okay, got
it. On the variety, they got wrecked hard.
Yeah. So then it's almost like the other hedge funds came in when they saw what was going on. And they said, there's no way this is going to continue. So they make a bet. Okay, that makes sense.
It formed like a whole sub-industry within the hedge fund industry that was just spotting what retail was doing, because now there was meaningful retail participation in equities markets again, where there hadn't been for a long time.
Yeah. And what do you make of that? Do you have a story other than just the ability for the retail market to gather together, consolidate their effort?
I think the real background behind it actually is just a decade of the US government deciding what stock prices are. And that pushed off ordinary people's participation because they found they could win in that game. You just bet the number goes up. And that was a bet that most people were able to make, which was really beneficial, and it can put more and more participation in. And then finally these participants, well, they're like, hang on, we can do things that hedge funds can't, and we actually, we have more freedom in some sense they do. Like when a hedge fund puts a massive short on, that's often disclosed. So, and retail don't do that on bets. So actually they actually have advantages at that point. And then it just required a little bit of, I don't know, it got the critical mass over like 10 years. And then finally realizing they had that advantage and seizing it took, I don't know, a few months, right?
Yeah. It almost felt like a couple of days.
Yeah.
I want to ask you a little bit about something you mentioned earlier. The impact of Luna and its collapse on the exchanges in the world was significant. Why were so many exchanges holding so much of their treasuries in Luna at that time? Is it, in hindsight, a miscalculation, or is it just kind of consensus on what's most stable and that ended up being wrong?
I think you got to rewind a little bit more. So starting to be one of the big customer acquisition players was offering yields, right? And the majority of exchanges were like, here's 8, 10, 12% on your stable coins as a customer acquisition plan. Like this was very, very, very common. And a lot of exchanges found it very hard to acquire customers without that. And, that just meant there's, when things kind of got bad starting around May last year, yields massively compressed. There was a very brief, like yield explosion again around November, but after that, it was just down only pretty much. And so they had to they just kept chasing places to try and get enough yield to try and retain these customers. Pretty quickly, I mean, I think the Luna Foundation and Dokor himself looked at this and knew that by offering those kinds of yields, they were going to push a lot of exchanges, a lot of the industry whales, a lot of projects, to go hunt everything into Luna / Erica. Just because they were the only ones offering what people viewed as an acceptable yield post November last year. But you look at the amount allocated, they're absolutely skyrocketed that time. And they knew that it was unsustainable. But they didn't really have a plan B, this decent yields was supposed to last forever. They'd based their whole businesses and economics on it. And what's happened since then is just a very slow deleveraging. Like they punted so much into marketing that they kind of needed these yields to continue so they could afford to accumulate customers as well.
Mm. And so even at that point, even in the early days, it kind of internally for the folks internally in those teams, they probably recognized that this was headed towards the wall in the medium to long term.
Yeah, I mean, a lot of it was just the way that the Luna team was kind of hatching out beforehand. That just made things were very unstable. The problem with this is it had just the death spiral built into it. The other way to get rid of that death spiral was to have some kind of sustainable organic demand backing the token, right? So the most obvious mechanism is to have some asset backing it, or have some demand on the chain, and it wasn't really either. And having Bitcoin backing, but then using that to, and then selling that Bitcoin instead, rather than just using that as like, okay, you can redeem the Bitcoin, which of course the selling massively exacerbating things.
God. And from your perspective, were you just more diligent about this, or how did you get lucky?
I think we did a lot of things like price of Luna. Like that was there.
Yeah.
I think we did not 100% allocated to that. I think we had, more systematic risk checks with this kind of thing and just pulled, the second the free curve was a balance, we got out essentially. Mm-hmm. And we did have everything bet on it.
Yeah. Yeah.
I think there were 200 people getting out. So probably that's maybe one of the wallets we used to at the time.
Yeah. Yeah.
But fundamentally, these things need to be diversified because yield broadly comes in 3 different flavors. And that was the most dangerous and toxic flavor of yield.
Can you tell me those 3 flavors?
Yeah. I mean, so the first one is kind of it's a marketing spend. Like it is sort of sustainable until the project decides it doesn't want to spend on marketing anymore. And the second one is that you're taking real risk. So if you punt your coins into Uniswap, I think at the peak of the bull market, I was annualizing like 20% annual returns. And my outlook now is like 6 to 8, probably something like that. And then the third one is this sort of like Ponzi coin thing, which you should avoid, right? You need, the marketing ones are short term. The risk-taking ones are sustainable, but fluctuate wildly, like very, very wildly. Like you can't base a business on when they're going to be. And then the third one will go to 0 in 4 days if you're not careful.
Yeah. Yeah.
And because that was the easiest one to allocate into, and there seemed to be very little understanding what these assets were, a lot of the industry ended up in category three, Voyager and Celsius and the rest.
Yeah. It seems like ultimately the different categories are built on where does it come from? If it comes from investor dollars into the business that then gets spent on marketing, if it comes from if it comes from future investors who are going to put more money into it. Yeah.
Yeah. But it just ended up being all coming from investors by Luna, and then that got cycled for paid out in USD.
Yeah. Interesting. And so when you think about growing Globe, what are the things that continue to be on the forefront of your mind in the short to midterm?
So in the very short term, mobile is critical. Like 67% of all trading right now happens on mobile. This was materially not the case when we started.
Wow.
So we put together a mobile team. I think we have one of the most amazing apps out there that we're waiting for Apple to accept. If they're paying attention, guys, please. We want to be an Android as well pretty soon. That's the first really big piece. The second is kind of shoring up how we manage risk on the markets. In the early stage of a change, really systemically important, doesn't matter. Now, a lot of the time we'll have like maybe the 10, 15th biggest book in crypto futures, and that gets scary if you're not properly managing that risk. I think we will probably the first futures venue with properly unified margining, which does require additional risk consideration. So we're sort of remodeling how we deal with that. Security is another big one that we're improving. It's just lots of really little things that are important. There's been a big rise in kind of criminal activity, I think, industry wide right now, like PVT virus, as they call it. You've seen all the DeFi hacks. I mean, DeFi has suffered similar levels of criminal activity, it's just less noticeable, To tidy up the security is a big one. I think that kind of covers the next few months.
Yeah. On security, how do you think of, or is there a systemic reason why the number of security breaches or attacks are increasing, or it's just more money in the space attracts more people?
I think, there's actually less money in the space. Like that's about 75-80% less money in the space. I think if you look back historically, most crypto, like these attacks, they're done by people who are very technical, deeply understand what these things are, and usually have some kind of, insider industry knowledge about, how things work, when the opportune times are. And so actually they tend to be people that founded projects or very close to other projects. And so it's often people with vendettas that have been booted out. I think in the case of, was it the DAO hack with ETH? Was it actually the founder, the Bitfinex, the former CEO? Maybe I misremember. Something like that.
Yeah.
So I suspect there's just a lot of projects out there that if they haven't managed the risk on the Treasury, they just dumped it all in Bitcoin or ETH. They're down 70-80%. And their dreams of 10-year runway or 20-year runway is now 6 to 12 months, right? And the revenue is probably down that much too. And so they're just getting aggressive and, doing questionable things. It wouldn't be the first time, right?
And you feel like we're in the midst of that now, in the midst of the questionable activity to make it through with a low Treasury and
Nomad hack. The Nomad hack was really this disgusting, the wormhole stuff, billions of dollars just being stolen. I think that's going to be more for the next 12 months. I think there's just a lot of motivated people that are taking big losses and just do it, morality goes out the window when people take losses.
Yeah. Wow. I would imagine the pathway forward is just build value and just move through it. Is that your attitude down it? Yeah.
I mean, I think we've sustained something like 50% monthly growth for quite a long time now, well over a year. I think we just keep listening to the customers on the exchange, try to always do everything everyone wants. Have to change our mind about things, which were a good idea at one point, and it's not being a good idea. But yeah, fundamentally, if there's something that's clearly a good idea, we generally do it like a week or 2 weeks later. People like and we kind of think what people need.
Mm. And why so many bots? You mentioned when you talked about user numbers earlier, you mentioned that there was just a extraordinary number of bots, not just for you guys, but industry wide.
Oh, yeah.
Is that the bots trying to make trades, or what's the objective of the people creating these bots?
I think some of it's just trying to get airdrops, so that's pretty common. I think we had a total out. The people thought like, okay, if I make like a fake account, then maybe I'll get some kind of reward with this, that kind of stuff. It varies. A lot of it is like very low the activity. Maybe looking to self trade, that kind of thing. Yeah.
And have you seen any significant hacks on your system that worked that you guys are now a better company for?
There've been no hacks on the system, but we have seen like pretty intense DDoS attacks lately. So I think, what did Google see? Google saw, I think, was it 15 billion or 20 billion requests in a few minutes? And we saw even this morning, like 3 billion API requests pumped at us in like 2-3 minutes. And yeah, this stuff seems to be coming from just botnets, but there just seems to be a different botnet every week. And the mitigation is just, industry insiders and security platforms share information about who the botnets are. You get banned if you're part of one, but every time there's a new botnet, until it's been shared around, so it is like it'll work for a few minutes of this. So we've seen a massive intensification in just DDoS attacks the last like few months.
And is that, do you anticipate that or expect that to be like a group of people, or does that take a large number of people to create that kind of thing? Or could that be one guy or a couple of guys in a living room somewhere?
It's a mixture. Some of them, it's just like a couple of guys in the living room. You always want to have like an underage guy, because if it's only underage meaning under 18, because then you get caught and go to jail, most countries in this world. Like you smack someone's API with 3 billion requests from a botnet of 50,000 servers, you know what you're doing. It's a crime. You gotta go to jail. So they usually working with someone else. That's going to be the patsy, as it were, or going to get away without doing the jail time. So there's a bit of that. It's widely speculated that there are, nations like North Koreans doing this kind of thing. I have seen no evidence of that. I've seen evidence of industry competitors do this kind of stuff. And I suspect that there are quite a few. But generally what happens is that just, there is a new there's a new botnet out, and someone opportunistic will just frag it temporarily and just try it on every exchange as quickly as they can. And so you'll see like, a few hours of downtime, maybe a few days of downtime across the industry. Depending on how quickly the exchange is either going to pay them off or like share the data about where the botnet is.
Interesting.
So downtime here should be clarified. Like, patching engines still work. Many traders can still trade on the exchange and have no issues whatsoever. But like, if you make a new connection in like a few minutes or sometimes a few hours or sometimes even a few days, depending on the venue, like it's going to take a while or just don't look right for a bit.
And the idea would be to exploit that to make some beneficial trades, like the pricing.
You do see that, yeah. So you see people will like run the DDoS and at the same time, because I think maybe the market maker is going to pull liquidity. They'll try and like self-trade and self-liquidate, or they'll just, try and just make massively missized positions, or if like they manage to hack a customer account. I can't back this on, I have heard the story at least. They'll try and make trades and then, transfer the winnings effectively from some bad trades from some account they've seized into their own market. That was definitely pretty common, I think, 2018, 2019, on a number of entities. So you don't get that, but I think the majority is just, they just want to get paid off.
Yes. And what part of this gets you? It makes sense. It's like an arms race at some level.
Pretty much, yeah. I mean, we hired the infrastructure guy from some foreign base. I think we probably say this publicly. and they, exactly the same thing. Just, I don't know quite how friendly Coinbase felt with these attackers. But yeah, people finally move on that. They've lost you for a bit. They go away.
Yeah. A botnet. So botnet meaning that there's a ton of servers, someone's spinning up, and then all at once they're making massive number of API requests. And the idea is to slow us down the system.
One is like as a proxy. Well, one is like there's a collection of proxy servers, and then they route the request with proxy servers and just massively amplify them. And the second is like someone's downloading something dodgy on BitTorrent and then open, ruby.exe. And now they don't know that there's a virus running on it, and it just waits until they get a signal from someone else's computer to go, saturate out its networks.
Yeah. And does that still, that latter still is pretty popular? Once I moved to a Mac like 10 years ago, I felt like I really didn't have to deal with viruses anymore. Is that still the case?
I don't know how that varies by operating system at all. I read it's still going to be a lot more prevalent by, on Windows versus Mac. I think just the security is actually better on Unix-like operating systems. I think Mac took a lot of the stuff from OpenBSD. I believe when they completely redid the core, I think it was OpenBSD.
Yeah, I don't know, but I know that it is distinctly different than Linux.
But just so they just saw completely rejigged, I think like 10 years ago. I feel old.
Yeah.
I remember there was a time where you could like look at the Mac docs and it would say, just type in like Linux, system commands that just went implemented on Mac. So they hadn't even changed the documentation. The code they took from OpenBSD. But it's just natively more secure. I think Linux in general is somewhat more secure. And it's just easy. It's just easier to talk to Windows than what's happened.
Yeah. Well, happily on a Mac. What part of this gets you most excited? I know you, I'm happy to bring up your background if you want to go down that road, or if you want to go forward and chat about the future of these. Like, do you get excited thinking about where crypto is going or where trading is going in particular? Do you think about it in terms of like the broad arc of our human species and the transitions from centralized government, fiat money to decentralized? Like, when you think of the industry you're in, many people that aren't in crypto look at it as the most exciting space to be in. Do you still feel that way? And if you do, what parts of it make you really excited?
Yeah, I think one of the big guiding things behind what we're doing, what most people are doing is globalization, right? Just enabling access to all financial instruments to everyone, everywhere in the world on broadly as much as is viable, the same terms, which is a pretty amazing advance, I think, and compared to where things were at 10 years ago, and they're really still at today. But so I think generally we're pretty energized about bringing that to fruition. There's constantly like really amazing innovations industry wide. NFTs kind of creating this new concept of membership club, most right. But it's creating, a sense of belonging and a sense of belonging amongst its participants I haven't really seen before anywhere, just with monkey JPEGs.
Yeah. Well, I'm not sure. It seems like that has dwindled significantly, right? I think a lot of people came in.
Prices went down.
Yeah. Yeah.
Look very bad. Yeah. There still does seem to be some pretty amazing crypto tech bots and maybe better. For example. I think there are like amazing things to think about in terms of what's happening with real world assets and how they get bridged, but that's just hard regulation wise.
You guys,
something that we're excited about, but we feel is a long way.
Yeah. You guys launched a token. Other exchanges have launched a token. It doesn't seem obvious to me why an exchange would need a token, want a token. Can you talk a bit more about that decision and why other exchanges have done that as well, possibly?
Yeah. I think that the most common argument for why an app, as it were, I'm not going to say DApp, but an app has a token, is it's a customer acquisition tool, a marketing tool. Exchanges are very limited in terms of how they're allowed to market themselves. And in the early days of the sort of, there used to be a dichotomy really between spot and derivatives exchange, it doesn't really exist anymore. It was very much the case until at least kind of late 2020, just because of regulatory reasons, really. It was one of the very few ways that you could in any way get people to know about and be interested in the platform, and then discover, hopefully, how good your product was.
Yeah.
So I think that's kind of the first part of it. Secondly, I think most exchanges do want to have their own layer one sooner or later. I think generally they would like to move to decentralized custody at some point. And so having your own layer one gives you a lot of value capture over that decentralized custody. I don't know how long that takes. It may be never. It's always a little bit hard to predict quite what the consumer choice is rest at. It could be that people prefer delegating all this control over just whatever you guys, this is your problem. You buy stuff in cold storage, keep it insured, we feel much better with that versus, any level of self-custody. That is not clear to me at this point, how that evolves. But it kind of gives you a route to that,
Do you guys have ambitions to go fully decentralized as an exchange?
I think you have to always recognize it's a way that they say go. Like, it really depends on regulators do. Like, you've got a few choices. One, one is just to become fully regulated near bank service, or at least to have a wing of what you do that looks like that. And you're seeing kind of finance more or less go that way. A lot of existing exchanges just go out there and just buy anything regulated that's usually tied in their own market. Generally, we're just trying to play the regulated game you were forced to lose. That was the case in the UK. It was a joke policy. Like, you were allowed to play, but you weren't allowed to win. So you were allowed to be semi-regulated, right? And operate a little bit this kind of service that people very clearly wanted, but you're only allowed to have like 1,000 customers or something for the first few years.
Wow.
Who would the right way to play that game? If you have an amazing product and you build lots of customers, well, tough shit. Now a bank is going to copy what you're doing, or someone else will copy exactly what you're doing, and it's going to have all of the customers out there. And
that's crazy.
Yeah, it was just one of the most ridiculous things I've seen. We didn't play that game, but it's what's crippled everything in the UK.
And where is it today? Have they responded to that?
Yeah, just full time. They just got completely crippled by this utterly ridiculous policy of you're allowed to win. But that's in general the UK's attitude towards innovation. So what has happened was that essentially banks weren't allowed to do it themselves, as they kind of created innovation factories within the banks, where the banks basically just, owns and controls you and let you maybe use a little bit of their regulatory infrastructure. And everyone else just said, you don't run in this country because you're allowed to win.
And what do the people think of this in the UK? I mean, do you feel like the people they don't know? It's just not mainstream.
They have absolutely no idea about what any of the regulations are, because you have to be an entrepreneur trying to build things and try to talk to regulators to find out.
Yeah. And the motivation would be
regulated a brief.
Right. And I imagine the incentive here is the banks want to stay in power. They influence the regulators.
I don't think I should say that, but that's
I
do want to stay in power. The second part of it.
Yeah, sure. So, no, that's you could say, well, we can't say we can't. You don't know. It's just speculation on why the regulated. But certainly the people making the decisions on the regulations don't seem to be motivated by letting innovation rip and,
not the priority.
Yeah, it's not the priority, which is, but that's why you see it happening everywhere. Interesting. And from a company standpoint, how is the regulation, licensing, how have you guys navigated that? I know you've mentioned you're all over.
It's like every year we put a new place to base it. Fundamentally, it just ends up being like a collection of entities, some of which have different levels of regulation, and which entity exactly is acting for each customer depends on whether customers on what infrastructure you have there. And so broadly, everyone is supposed to be walking into having this infinite regulatory skeleton in every country. Like you'll have. I think most exchanges right now are moving to the Bahamas.
Yeah.
There was a phase when they moved to Panama. There was a phase when they were in Seychelles. The reality is, where do they want to play? And if they're going to go play there, they'll own some kind of entity there.
And the implications of that would just be, you just have an office there, and then you can decide country by country where you're operational, but it doesn't really matter.
Yeah, I mean, down in that entity, it's a post box in most cases. Those are really weird, I think, press story recently about Binance being banned in the UK. What really happened was the Binance Board of Regulators, in quotes, UK entity, and then I don't think they filed any paperwork for 2 years. It was a post box. They didn't do anything. And whether or not a UK customer was being served by this regulated entity or some other part of the Binance, whatever network of entities, was completely unclear at all times. And then this UK entity just got a slap on the wrist from the regulator being, why haven't you filed any paperwork for 2 years? Binance wasn't banned. A UK entity within the Binance network was behind on its paperwork. And so the UK customers could still do pretty much everything on Binance.
Yeah.
It wasn't predictable.
Do you feel like there's a general arc to the trajectory of innovation, as typically would be the Western movement seems to be kind of, at least in your case with the UK, but America is teetering. We're not openly innovative. We're not openly accepting of crypto. There's a lot of criticism that Coinbase CEO publicly gives on the SEC. Binance, for instance, there's a lot of companies, exchanges included, that aren't operational in the US due to some regulations. Other countries in Europe seem to be more open arms with this. Do you have an overarching perspective or narrative as to the trajectory or potential tension between countries and crypto? Because it does, to me, seem like eventually the US dollar and other centralized fiat currencies just conflict with the proposition of a decentralized currency. And I don't know how you reconcile that if you're a government, other than to ban it.
Yeah, I mean, so I think there is a global overarching narrative, a same kind of thing that plays out in every country, more or less. And so the global narrative is what is going to be the world's reserve currency. And every country has a different take on this. Right now it's the dollar, right? The US is still broadly the world's superpower, although China's maybe just about overtaken it. It's kind of unclear at this point. But the dollar is still the world's reserve currency, and yuan is not. And so you have you have China and Russia that are really just want to try to take that power away from US, right? They want to make the digital yuan the world's reserve currency, and then China and Russia that kind of thing. And so there's that first thing. And then there's gradually every government realizing that there are benefits towards transitioning to a centralized bank digital currency, because it does give you a lot of additional control over monetary policy. And that all usually takes 8 years at least to play out. I think we will see most countries in this world have a CBDC sooner or later. I think you can kind of, there's an early stage when the regulators go out and they talk to every hedge fund, every investment bank, everyone that might have an intelligent opinion about it, and just get initial feedback should we do this? Why? How on earth do we do this? They can't even run a database, so how can they possibly have a digital currency at a government? And so they start gradually okay, understanding the benefits, they get much better control over currently gray sector taxation. They actually want to tax the gray. There's definitely a personal conflict of interest, given the way that most politicians structure their tax affairs. And so then that slows things up. And then depending, where they're at, how they feel about, trying to have their own global reserve currency, there's usually a down phase. They're just trying to boot everything else out and push adoption of their own CBDC. Yeah. And every country in the world is somewhere in this current evolution. There are a few that have either a CBDC or just whatever, just use the dollar. They don't even use that worthless paper anymore. There's a few that are very public about, okay, we're going to have our load soon. There's a few that are in the trial phase. I think India recently kind of went through the ban phase and came back out. And it's probably now starting to think about going into the trial phase. The UK, no, I was party to the UK government going around and just saying, well, should we do this? We don't understand what it is. Why? How do we do it? So that's kind of what guides a lot of government government action.
Yeah.
There are definitely like other just regulatory clampdowns, which are more just kind of on, customer protections, consumer protections. Like in 2021, there were a lot of things that just was very Ponzi schemes in crypto, and those generally piss off regulators.
Yeah.
Yeah, everywhere around the world. And in many ways, they're still figuring out the ones from 2017 and 2018. Yeah, and so that pushes them to intervene in a lot of cases. And so just, pushing through consumer protections, their own, internal battle with CBDCs. There's quite a few different drivers going on. Somewhat asynchronously, like the consumer protections have nothing to do really with the CBDC debates. They're everything to do with what dodgy stuff has crypto just done in the previous cycle.
Yeah.
Yeah.
Do you think it's more likely that there'll be a Bitcoin internationally recognized monetary standard, or USDC in the West, or like digital yuan, like distributes throughout the Western world?
I think Bitcoin has kind of evolved into being more of a digital gold. So I don't really see how that goes the currency role. Like, there's usually it's described as like three use cases for a currency, and it satisfies that, but it really doesn't satisfy like unit of Carrollton, the whole transferability thing. So I feel like Bitcoin's kind of sleepwalked into digital gold. It might be they try to find a means of having another thing which works as a currency, but right now that's not where we're going. And it's going to need a lot of intervention to change that. And I think honestly, most Bitcoin holders don't want to change the direction. I think that people want this, right? And staying the same. Yeah, broadly. I think Ethereum is more interesting in that regard, but just again, it sort of feels too volatile. The right thing to do is just measure it against commodities prices, right? Don't look at it against the dollar or ACF. Look at it against commodities prices. It's probably still too volatile against the price of X. No one really sees that as a means of payment.
Yeah.
The other ones, it sort of feels like a toss up between the dollar and between the yuan. And it really just reflects the sort of the war for supremacy between the US and China right now. And I think the last bull run really saw the dollar gain actually a lot of dominance in the world. Like in massive parts of Africa and Southeast Asia and all these other countries, dollars on prawn because of low transaction fees are now the source of payment. Like it's stable, certainly by any local fiat. It's pretty cheap to transact. Literally, you just be there on your phone, so next to somebody on their phone, tap your votes or whatever, and then those dollars are moved. And that's actually a really great solution to the problem they have.
In some ways, it's shocking to me because of how much money was printed and the inflation in the US, but I suppose it's all relative, right? It's compared to other optional currencies.
The monetary supply doubles, right, in like a year with the COVID stuff. Ugly. It's going to take a while to trickle down because the right phrase.
Yeah.
Looks ugly.
Yeah.
But for what it's worth, I still bet on the US more than I bet on anything in Europe or anywhere else in the world other than maybe China.
Yeah. Interesting, man. Is there anyone in particular or any books that you've read that have attributed to shaping your worldview or perspectives on things you wanted to share?
Yeah, I think every entrepreneur reads roughly the same books and should be reading as many books the same path. So hard thing about hard things was quite formative for us. Just seeing the horrors of navigating .com, the strategies they employed, that kind of thing, that was very helpful. I think in navigating, I mean, crypto's crazier than that, frankly, like a lot crazier. But it was still like the craziest thing that happened in history until then. Carl Eifel's biography was pretty formative. 0 to 1. Shoe I still love Shoe
Phil Knight.
The hustle. The raw hunt.
Yeah.
Like just pure self-driven determinism. The world is going to look this way, and I'm going to do what it takes to get it there. I think those are probably the top ones.
Yeah.
Yeah.
Yeah. I really
I
like
think
Trudeau.
just there's a few which are just like case studies of survivorship bias. Like I think about screw it, let's do it. Richard Branson's book.
Mhm.
And I just looked at them like, well, okay, if there's 1,000 Richard Bransons, 999 or whatever died. It's I did not become a billionaire. Like it's just this is taking obscene risk and just being lucky enough not to die and then writing about this conflicts.
Yeah.
So I feel like there's almost like an anti-lesson in those kinds of books about managing risk.
Yeah. Yeah. That's an interesting perspective.
Yeah.
Yeah. No, I mean, you would not be writing a autobiography if you don't live to write it. So that seems obvious, but you got to survive. Yeah. James, thanks for staying up late, man. I really appreciate it. And congrats on everything you guys have done so far. And yeah, hope you guys keep crushing it.
There's a little more to come.
Awesome.
Be on the show. Thanks, man.
Thanks, James. Cheers.